Good morning, good afternoon, good evening, wherever you are in the world. Welcome to the Helicopter Investor Town Hall for April. I was just checking which month it is. It's April 2021, and this week we've got 5 fantastic guests who are going to give you a guide to what's going on in the helicopter market now. First up, we're delighted to have Will Sturm, Vice President of Sales, Aero Asset, who's going to talk about the pre-owned helicopter market. Will, how are you?
I'm great, Al. How are you doing?
Yeah, good, thank you. Over to you.
Hi everybody. As always, I'm thrilled to be speaking with you today on Heli Investor Town Hall. I can't stress enough how much I miss being with everybody in person, but I really have to commend Al and his whole team on bringing us together to really continue a dialogue with about the helicopter industry and the markets. Aero Asset recently published its annual Heli Market Trends Report for 2020. So I thought I'd start by giving you guys a lowdown on 2020 and then touch on how the market has progressed through Q1 of 2021. So our report covers twin engine helicopter models that are in production and variants with recent pre-owned sales activity. It monitors pre-owned retail sales, supply, and absorption rates. So we tracked 143 on and off market retail transactions in 2020, which is actually a 10% increase in volume over 2019, and it's the highest level of transactions we've seen in 4 years. While the light twin market has remained stable towards the end of 2020, actually medium twin and heavy retail sales volume increased significantly. If you compare that with 2019, heavy retail transactions nearly doubled and mediums increased by about 10%. So, and then the last 2 quarters of 2020, we saw supply for sale increase by about 8% across the board. And although we noticed the decline in both supply and transaction volume in Q1 of 21, what's encouraging is that the current supply level is back to what it was pre-pandemic. So, I talk about it a lot, but one of the key indicators we look at is the absorption rate. And again, that reflects the time it takes to exhaust supply for sale in a market if no further supply is added. The 2020 absorption rate has actually remained constant compared to 2019 at roughly 21 months. But to kind of dig in a little bit, the Airbus helicopter light twins were the most liquid markets in 2020. But it's noteworthy to say that the EC-135 slipped to number 5 on our liquidity lineup for the first quarter in 2021. Similarly, the Bell 429 absorption rate improved dramatically towards the end of 2020, and yet it just hasn't maintained the same activity level in Q1. Actually, 5 of the 13 markets we track have not seen retail transactions so far in Q1. So that's kind of an overview of where we're at currently, Al.
That's brilliant, and you got me faster than I thought you were going to. What are your thoughts on Q2? Is it too early to say?
We're tracking 25 deals that are currently in the deal pipeline, and we see a lot of activity in the 109s, the 139s, and the 135s. And there's activity in the 225s and the S92s as well. So, the takeaways I have to consider looking to Q2 and beyond is really that 4 quarters, after 4 consecutive quarters of decline in the deal pipeline, it actually grew in Q4 of 2020. It's up 10% in Q1 of this year, and we're back to pre-pandemic levels. This doesn't give us a crystal clear visibility on what the next few quarters have in store, but the helicopter market remains resilient in light of the pandemic. So I think we'll see a lot more activity in the coming months.
So if we saw 10% more deals last year than 2019, and it was the best year for 4 years, is 2021 going to be even better?
All signs point to yes. I think the market will continue to pick up. We're seeing demand coming from markets that really see beyond the pandemic, and really, again, so far this quarter is very promising. Those deals that I were talking about that we track in the pipeline, they're getting closed, and I think logistics are becoming easier. and we'll just see that I imagine to see it improving.
Okay, we've got a great question from David Crick in Australia. We should all feel sorry for David. He's in Perth. It's winter and only 30 degrees Celsius. David says, is there a sense of whether the increased transactions are retail or precipitated by distressed scenarios?
No. Really, the distressed segment, I haven't really seen much of that at all. The incentives that have been provided by the Trump industry, they haven't gone away with Biden. So the companies are doing well. Similar situations are available in Europe. So as of yet, I haven't really tracked a whole lot of distressed assets. Okay.
Where are you seeing buyers coming from geographically?
Honestly, everywhere. Outside of the typical North American and European demand, we're getting inquiries from everywhere. And we've tracked transactions recently in South America. There's demand coming out of Australia and Asia as well. So another encouraging thing is to see it coming from all geographical locations.
Which markets are seeing a shortage of inventory?
Well, if you take a look at our report, we have our liquidity lineup showing which markets are the most active. And top of the board last year and still Q1 of this year is the EC145, mainly the C2 variant. Pretty much anything that's less than 10 years old, single pilot, dual pilot IFR with options for EMS, they're nearly impossible to find. If you want to kind of look at more drill down on locations, the 109s, SPs, and Grands in the US, there's only a handful of availabilities, and half of them are under contract right now.
Okay. In the business jet market, there's been a lot of talk about new buyers. Are you seeing that on the VIP helicopter market?
Yes, there are new buyers. First-time buyers, really, there's been a VIP demand in that segment. Interestingly enough, to what we've seen is they're looking for a good deal on an aircraft with good pedigree, something that might be even 10 years old. That's kind of where the first step has come back since those markets come back. So yeah, we are seeing it. That's pretty much where the majority of the first-time buyers are coming from.
And we've touched on distressed sellers and the fact you're not seeing any of those. Are you and first-time buyers? Are you seeing what's driving people to buy helicopters at the moment?
Well, I kind of touched on it a little bit earlier. These bigger institutions that can see what's going to happen in 6 months, 18 months, 36 months. Their requirement is still strong, and since prices have actually, and one of the reasons that there are more deals happening is sellers have become a little more in line with market pricing. So that's driven a lot of purchases. Ultimately, it comes also from just consumer confidence in economies around the world, and we're definitely seeing more of that. The tech market's booming, the equity markets are moving. It's giving all kinds of buyers confidence, especially first time and institutional.
Talking about tech markets, the VTOL market is on fire at the moment. We're seeing SPACs, we're seeing orders announced or pre-orders announced. What are your thoughts on it?
I look forward to seeing them on the pre-owned market in a couple of years. But I think that technology is just going to keep moving forward. It's becoming more and more of a reality every day. I'm looking forward to seeing where it goes. But I think it'll be a part of our industry for the rest of our industry, really.
Have you? I know there's no pre-owned models available, but have you had buyers asking you about electric helicopters?
A little bit here and there. I remember, it's a really interesting technology. It's just got to be developed more. At the end of the day, you're still moving a lot of air, and you need a lot of power to do that. So it's just becoming more and more efficient. And yeah, we get asked about it. But from our large operators, they're still taking advantage of the equipment that's out there, and it just keeps getting better.
That's brilliant. Well, thanks so much. So in one word, how would you sum up the pre-owned helicopter market?
It's a great time to buy a helicopter. That's not one word. Resilient.
Brilliant. Well, great seeing you. Thank you so much to William Stern, Vice President of Sales at Aero Asset.
Cheers, everybody.
And now we're delighted to have Tony Cramp, Vice President of Aircraft at Shell. Tony, how are you?
I'm very well, thanks, Alistair. Good to be here. Thank you.
No, well, thanks for coming. It's great to have your side of the market represented, the one that everyone likes to criticise. What are you focused on at the moment?
I'd be glib and say survival, but no, I think we've moved beyond that. I think the focus really of sort of learning the lessons from the last year and getting through what was an incredibly tough year and fantastic collaboration across the industry. I think the operators have done amazingly well. There's hardly missed a beat in terms of our operations, both from efficiency side, but also from the safety and the safety performance continues to improve. What we're now focusing on is looking forward. So if I look at my own company, say having got through an incredibly tough year, we, like many in the industry, are now looking at the transition and implementation of a new strategy through the energy transition and how we're going to operationalize that. And certainly from the aviation side, what we're going to need in terms of assets going forward and how to make to realize the efficiencies that we need, but at the same time maintaining that safety performance, but really serving the company as it transitions into slightly different markets.
Talking about safety, one of the big developments last year is IOGP Report 690. Could you want to explain that to people who aren't familiar with it?
Yeah, I mean, the IOGP is the industry body for the oil and gas producers. And for many years, the aviation subcommittee has worked with a number of our stakeholder partners to set industry guidelines. The previous ones that were out there, 590, is a pretty old document. It was completed back in 2010, 2011, and has really stood still. And in terms of an industry guidance, industry standard is a fairly low bar. We've been working for the last 3 years to bring out the new industry standard, at the moment for focusing on offshore, but we're expanding that at the moment and we're rolling out the other disciplines over the coming years. And what it aims to do really is set a higher bar, which is based on the best practice from the best operators out there. So there is very little in 690 that is not already in place amongst the best operators globally. And what we want to do is reflect those in the industry standards, so those good operators are incentivized to continue with their operation, and those that are not yet there are incentivized to raise the bar and join them.
And one of the other benefits of it, by raising the bar, that in theory it's sort of standardizing it for the top tier customers. This is what you guys want.
Yeah, well, it's reducing complexity. At the moment, we were in a position where we as customers were all asking for very different things. That creates a hell of a lot of complexity for all the helicopter operators. It also potentially has negative impact on safety because of a number of other factors coming in there. And the messages going out into the market are very different. So I'd imagine for a lot of your investor community, they want to have a bit of certainty as to what the customers are going to be asking for in the years ahead. So what we've tried to do within that and the types of helicopters we're now looking and where we're setting the bar in terms of the certification levels are a key element of that, so that we can realize the safety benefits that we're aiming for, as well as the operational efficiencies. Albeit we're not there yet, we're still wanting to leave room for further innovation, further development, but we certainly want to bring the bar up to what we consider a minimum base level to meet our safety goals at the moment.
Do you think it'll be 10 years until the next one comes out?
No. Well, I sit as well as with Shell. I'm chair of the IOGP, so I can make a commitment that we're continually working on it. We've got a great team, so we're collaborating not just within the oil and gas producers, but also with the operators themselves through Heli Offshore, who are our major partners in this. So everybody's in there at the moment. We've done offshore. There'll probably be some tweaks to that beginning of next year. and at the same time, we're covering all the onshore helicopters, rotary wing, and our fixed wing operations as well. So no, I'd see this more now. We've brought it back into the present day, and we'll try and keep it fresh as that moves forward.
One of the big news stories last month was Babcock selling its offshore business to CHC. Mm-hmm. How do you feel about consolidation as the end customer?
I think providing what we want is strong, stable operators out there that have the ability to invest in the future, to invest in their own people, to invest in the systems that we want there. Yeah, we certainly want competition in the market, but we want that to be healthy competition. I think there's been elements in recent years where, because there's been overcrowding in there, people have been undercutting, and what you end up with there is people accepting unsustainable contracts. Now there's a responsibility on us as the customers to contract responsibly and to accept what's realistic, but it's very competitive in both sides. And I think that rush to the bottom, as it might have been, is not going to help anyone. So I think we've all been expecting consolidation. We've seen it over the recent years with PHI, HNZ, Bristow and Aera, and now CHC and Babcock. So no problem at all. If that creates a good, strong company, we've still got plenty of competition out there. I think it's a good thing.
Everyone talks about bidding and the Dutch auction of going lower and lower, and whoever, when you win, you may not have actually won. Are you seeing any signs of that stopping? Because it's very hard for you as well, isn't it, as a customer? If you're being given cheaper prices, it's very hard to go, actually, no, I'd rather go with that one. Yeah, I mean, it's for us. I mean, I sit on the aviation side of the business, and we have to talk to our supply chain, and it's about educating those guys that what an unsustainable bid looks like. I think there are still elements. We've seen that across the industry. Obviously, I don't get to see the details of other companies' contracts, but certainly within our own, we look to scrutinise that. You look to put in place structures so that you can identify it and weed those out. We play with the better operators, so that gives us a good sense of comfort going into that. But I think it is still out there. Again, going back to 690, the intention of having a minimum bar for the industry is a contractable standard, so that if you are going into a contract, we want both the customers and the helicopter operators to be knowing that this is the service that's expected. Therefore, you're going to need to pay as much to achieve that service. So hopefully it brings that certainty to both sides of the argument, or more certainty. You spend a lot of your time worrying about safety. Is there anything out there that has moved along significantly in the last year or so? Yeah, I don't spend. Well, I think we manage safety. We spend a lot of our time managing safety, so we don't have to worry about it. So I don't lie awake at night because I've got a lot of trust in the operators that we have and the operations we've put in place, because they're doing a fantastic job. I think if you look at the trend over the last 10 years, it's improved incredibly well. If you think about back to the early 2010s, we had a number of big fatal helicopter accidents. And if you look at the safety performance over the last few years, that has improved significantly. So I think there's got to be credit there, and a whole heap of that credit goes to the helicopter operators themselves, but also the OEMs are consistently improving the aircraft and the systems. We've got better reliability, better redundancy built in. Hopefully we as the customers are setting the scenes and asking for the right systems, or demanding the right systems to be put in place. So I think it has improved. It's not there yet. We know that there are still some fatal accidents each year within the industry. We know personally that there are far too many near misses. So we're not going to be complacent, but I think at the same time, we've got to give credit to that. Now, when's enough? We're not there yet. We'll be in a good place when we don't all have to jump into dry bags and we can put our life jackets back under the seat when we're flying out of Aberdeen or into the Gulf of Mexico. And I think in many respects, that's not too far away. You're looking at some of the later generation of aircraft coming out now. They're making another step change in those areas. So I think we still have to keep pushing it forward. But I think we do need to give credit. And within our own companies, I spoke at Heli Investor about 4 years ago, and I sort of warned of the threat of substitution from maritime as an industry. And I think that very much sits out there. And I think it's something that all the investing community need to be aware of, and they need to play a part in marketing the rotary wing side as well, because
if you look in both the traditional oil and gas, but also certainly now when we go into renewables, the maritime side has a very strong play in it. And I find it quite strange at times that it's given as much, given the safety performance we have comparably, and also the time factor, the flexibility you have, and increasingly the emissions, as we've all become more sensitive to the emission side as well.
That was interesting. On the last one, we talked a lot about the maritime focus in offshore wind. But as we see companies like yours focus more and more on that sector, do you think the culture will change where you know the value of aviation to your operations, and everyone in Shell does?
Yeah, we can certainly bring more experience into that. So we've probably got. I mean, after the last one, I had a good chat with Lee after the last one, and it was fascinating to hear what he had to say as someone who's embedded far closer into the to that wind industry. I think we are in a easier position in that we have an established helicopter services, so moving them across is going to be easier. But you still need to make the case, and I think there's still an onus on improving the efficiency. The running costs of certainly our legacy or our slightly older helicopters are still far too high. So it still makes for a difficult conversation to have when you're having the discussions between maritime and aviation. So the more reliability we can bring in, the more efficiency we can bring into those operations, the easier that conversation is going to get.
There's a lot of talk about slowing down production offshore and how long the future is going to be. Does that mean it's more likely that when you're and how a lot of rigs are now being bought by private companies, are they more likely to focus on the cost and return to maritime if they're eking out returns, do you think?
No, I think everybody focuses on the cost. I mean, we've got we don't just throw money away. Everybody's focusing on the cost now. That's why we want to move to efficiency. So the recent contract changes we've made recently have been with an eye on getting a much more efficient aircraft in that's got a lower running cost with that. So I think whether you're a major or a smaller independent, you've got that same focus. I think some of the other arguments that are coming in now, so we're looking at more sharing opportunities. Yeah, we're still in the case where helicopters spend the majority of their time sat on the ground and not actually doing the job they're paid to do. The comparison with the airlines is quite stark. So where you've got a high density operation, then opportunities for sharing, for getting more work out of the assets that we've got are the areas we're going to be looking at.
Looking back 13 months ago, when we were just in the first lockdown, or the world was in its first lockdown, are you shocked at how well your operators adapted?
No, not shocked at all. I think quite proud of how the whole industry's come together. If we look at the organisations, whether it's the IOGP, ASC, Heli Offshore, or the individual companies, all the individual operators, it was fantastic. I mean, we were meeting on a weekly basis at the beginning of back last March to get it all set up, and the OEMs coming in as well, screens being made, protocols being put in place for testing, the airports getting themselves sorted out. It was fantastic, and for the first 3 months, we were literally meeting weekly to make sure all the information was being spread right around the world. So it wasn't just in one region. We were able to spread that around and build the efficiencies. So no, not shocked, really proud of the way it's been done. And hopefully there's relationships in there, there's efficiencies that we can build on going forward.
Brilliant. Tony, thanks so much. Really great to you. Thanks for coming on.
Awesome. Thank you.
That was Tony Cramp, VP of Aircraft at Shell, and we're now delighted to have Clark McGinn from Uplifting Advice. Clark needs no introduction. Long-term financier, borrower, and lessor in this market. Clark, how are you?
Yeah, very good. Thanks for asking, Al. It's strange in lockdown, as we all know that. I know the colour of my wallpaper far too well, but it's nice, and thank you for facilitating these town halls that have given us some semblance of chat in the industry. Thanks, Al.
No, thanks, and hopefully we'll get back to everyone being in a room again, and maybe not shaking hands. That's probably gone forever. So, Clark, what are you thinking about at the moment with helicopters?
Well, I think we've heard from Will and from Tony there, some good stories beginning to come out for what seems like the first time in 5 years. Air and Sea Analytics is shown as the 92s, most stable. Aero Asset was talking about the volumes in the second-hand market. Yeah, IBM's been publishing numbers for valuations to give us ideas, and we've seen still a restricted number of OEM deliveries. So all of that's very positive. But the thing that slightly worries me is the two prevailing orthodoxies from before the lockdown. The first orthodoxy was, if you're an operator, just cut your costs, hunker down, keep your planes flying somehow, and be patient for the upswing in the oil. And then the second orthodoxy was that this is effectively an OGP, an oil and gas crisis, not an industry-wide crisis. And for me, the reports that we've seen on the write-downs from Milestone Aviation in GCAS, in the AerCap announced sale, and the recent investor update from Babcock, which pretty much says they're going to exit onshore as well, really begin to challenge those two orthodoxies for me.
Technically, Babcock just said we're examining opportunities.
Yeah. I'm examining opportunities all the time, but not quite as publicly as that. So it's not because because the oil sector was so hit, not just a downturn, but the worst downturn that anyone ever experienced. And as Tony talked a couple of minutes ago, the effectively corrosive competition on price. How patient can the capital be is the big question. Unless something improves, then it can't go on the same. And I think that it came to me when we started talking about the transition to other energy sources and greening. Denmark announced a couple of weeks ago no more exploration licenses and production to stop in 2050. Now, they're by no manner of means the biggest or most significant producing country, but it is an indication, as is the Scottish government's clawing back on its support of the oil and gas support industry in Scotland. So we've got decades of production ahead of us, perhaps less exploration, but in an industry where our asset has a 40-year working life, how many 40 years are ahead of us? 1, 2, possibly. So the time to start looking at bedding down our industry and the competitive structure is really now. And I think by analogy with what Tony was saying in IOGP at 690, similarly, the constructive consolidation that we've started to see in the industry needs to pick up a pace. So that's oil and gas. Then the question that we've heard at your conferences has typically been, but you don't need to worry because the other mission critical industries you can support the overhang. But the overhang, as we've seen from Babcock's announcement, has actually become an overspill as anxious lessors are redeploying into other sectors. There are cheaper second-hand aircraft that your Will was talking about, plus of course remissioning within operators themselves. So Babcock shows the challenges, the competitive challenges in Europe. We saw today Heliservice of Germany winning the contract to operate for Lincolnshire and Nottingham Air Ambulance here in the UK. So national barriers are very fragmented. And of course, in North America, horrible market where Global Medical and Air Methods, the two largest, are rated B1 and C, AA1, really weak ratings because of the problems in that market. Everyone said, we can expand. EMS is growing as the middle class grows. People want more health and safety, want more air transport, want more emergency service. But for every successful new market opened like Taiwan, we've seen setbacks in India, where 3 helicopters were returned, or, of course, the very significant EMS failure in China last year. Search and rescue, another golden opportunity. If the industry's challenged, if values are challenged, then predicate on a long-term contract. We saw CHC being the preferred bidder for North Norway and Tromsø. But for that piece of good news, in Ireland, which is up for rebid, the Irish Air Corps is trying to produce a state-funded add-on or rival to the commercial search and rescue. And in the UK, when we seem to have just really bedded down SAR-H, the harmonised SAR, under Bristow's excellent operational skills, we're rebidding on a new model that's going to see significantly fewer heavy and super medium aircraft and a raft of smaller aircraft coming in. So the rules have just changed again. Wind, great opportunities. And as Lee talked last time and Tony touched on there, there's an almost embedded maritime culture that we as an industry need to break. And I think when you think that a helicopter in 1 week emits as much CO2 as a boat does in 1 day, there are positives that we have. But again, my point is we can't just sit still and take that for granted. And the same goes with fire. The sad increase in catastrophic fires that we've seen globally means that investment in the fire fighting parapublic sector is growing. A lot of it seems to be going to the 15 to 20 million Firehawk rather than reusing older equipment, which was the model. A natural home for older kit, lower commercial cost. It means that splitting 6 months on service and 6 months off service is a more sensible way. But again, a smaller capital cost, a smaller part of our industry. So is it good news or is it bad news? I think, we are getting in good news, but we mustn't. My worry is that we have a complacency. The traditional view that oil and gas was one set of risks and other helicopter missions are another, I think has been disproved in the last few weeks quite strikingly. It is a mission critical industry and investment in assets is going to be important. But if there is even a hint of a finite investment period, even of decades in oil and gas, and if there is continuing over competition in oil and gas and other sectors, it is going to make it a very hard proposition for new capital and importantly for financiers, whether asset-based or corporate-based, to enter into the sector. And we need that re-energy in our business to move forward. So I think, Al, I'm sounding like a broken record here. I think we're very much in a better place compared to 1, 2, 3, 4 years ago. But there's still action that we need to take if we're going to ensure a long-term future for profit in this industry.
What action is that?
I think fundamentally, since we've got OEM discipline, since we've got contractable standards in IOGP 690, it's more consolidation, without a doubt.
Although consolidation doesn't get rid of aircraft, does it? You just end up...
That means, consolidation means that you can control your pricing better, and it means that you can reposition your aircraft. We saw one of the things that came out of the Bristow ERA merger was their decision to download 30 odd aircraft for 30 odd million. That's hard to do, so that's easier to do in a larger organization when you're moving forward. It's harder to do if you're sitting with the same patient capital and eroding your cash.
You've been an organizer. You were there in one of the lessors get blamed for everything.
Yep.
But in the run up to at the same time that the lessors were trying to enter the market and grow, we saw Bristow openly saying it would double in size in the next 5 years, and it built a massive organization. I'm still convinced you get economies of scale as a helicopter when you're operating across different AOCs, different markets. Does operating in Nigeria give you an advantage in Australia?
I think what it does give you an advantage is the ability to reposition your owned aircraft. If you're in one region, you're there, and you can't move beyond it. Having the flexibility. If you remember, when old Mr. Bristow and old Mr. Dobbin were there, that was really where their business plan was predicated on. Now, that is crimped by the ability of the lessors to give a local operator or a super regional operator access to aircraft quickly. But reliability, planning, But those are positives that the operators can bring in, and the lessors have their own problems out of the industry as well. So it's not there's a balance between the two that I think naturally settles down.
The other thing you haven't talked about is technological replacement. There's a lot of talk about electric, and hydrogen and other.
Yep.
Do you think that's sort of bearing? Do you think that's at the back of investors' minds?
I think there's an uncertainty there. That if you think in the good old days, wherever they were, the rule of thumb in the global helicopter fleet supporting oil and gas was there was about 90% on production and about 10% in exploration. So if you start saying that exploration is going to be less important in the next 10, 20 years, that takes a bit of a chunk out there. Routine maintenance and observation can be done by drones. There are other technological advances, but still the day in, day out of getting men and women on and off a production platform is a business model that will be there for a long time. And so coming back to that consolidation, what it means is that larger players consolidate in that market, can afford to lose 6 or 7% to further automation or drones doing inspections or possibly even carrying some cargo. And again, that gives the redundancy within a larger organization, allows a rational use of bid capital.
And I know you do this a lot, when you talk to a lot of investors looking at the sector, are there any areas where you think capital could be deployed quickly and with good return opportunities?
Yeah, I think parts of the consolidation, certainly, we've seen LCI doing very well in the sidecar style of investment. I think that's a very illustrative example of how collaboration can bring an existing business and new capital together. And I think there are probably analogies with that in certainly search and rescue, fire and wind as well.
That's fair. And fire is an interesting market, isn't it? Because you touched on that. It just seems a very hard industry in which to make money. Yep.
It seems to be, and the one thing that the investors say to me is that just with climate warming and the significantly larger number of catastrophic fires, there is something there. I think the problem that has been in the past, how do you make money? You had your aircraft in the ground for 6 months of the year probably, and the overlap meant it's very difficult because of the AOCs and the transport, say to move your aircraft with Spanish-speaking pilots from Extremadura down to Chile. Possibly there are business models that can help that. And certainly, I think as it becomes a more pressing economic problem for states, then perhaps investment will grow. And we've certainly seen that in, say, California and a couple of the US states, where they're buying very significantly priced 24, 25 million Firehawks, which is a huge investment and probably the cost of a whole fleet for an operator in South America.
Okay, brilliant, Clark. Thanks so much. Great to see you.
Yeah, good. Thank you for
asking. Uplifting advice. Thanks so much, Clark.
Cheers.
And we're now going to go to former colleague of Clark's, Oliver Althoff. Great to see you. Oliver is head of the US and head of North America. I'm downplaying it. The US is not enough. At Seabury Corporate Finance and a managing director. Oliver, how are you? Oh, you're just on mute. Sorry. Oliver's just connecting. He's been on mute because his house is having work done to it, and they were cutting a kitchen counter just minutes ago. So hopefully they're finished there. Oliver, it might be your headphones. You might need to take those out. So you can hear me. Okay, we're going to try something else. It's not letting me mute Oliver. You might have to take the headphones out, Oliver, and try. No. Okay, sorry about this technical problem. Oliver, I'm going to come straight back to you. I'm afraid we do occasionally have these slight issues with Crowdcast, so let's get Oliver back on. After Oliver, we're going to look at new aircraft deliveries. We'd like to have Chris Seymour, Head of Market Analysts at Ascend by Cirium. And now we've got Oliver, and he's speaking. Brilliant. Oliver, sorry about that. How are you? Okay, I can hear you.
Can you hear me now?
I think you might need your AirPods in. Oh. We're having a problem with the computer. I could hear you. So put your headphones back in. We had him very briefly. Sorry about this. It's a Crowdcast day. Although excitingly, we haven't been able to get Clark on for the last two, or Tony on the last one. So it was going so well. We've just got Oliver connecting now. Okay, I can hear you. Great. Oliver, how are you? It's unbelievable. We get him. Oliver, do you want to take your... I'm not muting you, I promise you. I'm not muting you. I wouldn't do that to you. I'm going to take your headphones out and just disconnect your iPhone, and we'll come back to you now. Okay, final chance, Oliver. If not, we'll get Oliver on next week. It's a real shame because Oliver is about to talk about mergers and acquisitions, funding, and the general market. For those who don't know him, as I said, Managing Director, Head of North America at Seabury Corporate Finance. Before that, he had a career. He worked at a helicopter lessor, and before that, he was a significant helicopter financing. And
can you hear me now?
I can hear you. How are you?
Perfect. All right. Well, sorry for the technical difficulties. And it's great to be with you, Al. Thanks for the invitation to join this panel, and thanks for the colleagues on the panel, and then also all of you in the audience. Today, I will focus on the consolidation, M&A, and the capital markets in the helicopter sector. So Clark was an excellent lead-in into that. And when I look back over the past 15 years that I've been part of the industry, I don't think that it's ever been as active. We've had our episodes where we were doing a lot of capital raising, episodes where we did restructuring, both as creditors as well as from the Seabury side within the industry, CHC and others, and Waypoint Leasing, of course, as well. And then also the M&A plays. Our team has concluded 2 transactions in the last 6 months. We have 2 current assignments, and there's 3 to 4 other ones that are actively under discussions. And I think we've had, as a couple of you have spoken about already today, Al and also Clark recently, with respect to Babcock's announcement, not just the offshore sale of Babcock Offshore, the old bond business, to CHC, but in general what they are talking about as to how their continental onshore activities are going. And I think there is several catalysts, and I'll just give sort of 5 examples here that are in play for consolidation. So one is organic growth in certain geographies has slowed, and there is a saturation or near saturation in the marketplace. Whether you look to the North Sea, Gulf of Mexico for OGP, EMS in Western Europe and North America, there is simply no need for, nor is there opportunities for a lot of new contracts. That has effectively resulted in a musical chair game among the operators, where they're trading contracts from one to the other, and the problem is that pricing and profitability spiral down. Then the end users, and sorry, Tony, from your perspective, have also created price squeezes and margin pressures. So the play for consolidation by being able to do horizontal integrations, consolidate AOCs down, maybe consolidate fleet type down, and streamline operations, be able to use maintenance aspects more effectively over a larger group of fleets, or as Clark mentioned just before me as well, in terms of being able to reposition assets. All of those synergies help offset some of the pricing pressure that's occurred in regards to new contracts that have been bid at razor thin margins. Operators as a third kind of catalyst is, I think they're becoming keenly aware that just being in one end market exposes them to too much concentration risks. The lessors, which had an overexposure to the OGP market, clearly saw that occur when the OGP market suffered over the last 5 years significantly. Thankfully, it's now stabilized and looking like it's turning up a bit. But that concentration has harmed them there. Similarly, operators that have concentrations only to one particular end market are realizing that diversification would help them. A fourth catalyst is that capital is available to provide for consolidation through new investors. Still a little bit challenging on the OGP side. I'm not going to sugarcoat it. But the recent stabilization there, is giving some positive inquiries out among new investors. But there is significant interest in SAR, EMS, firefighting, offshore wind farm, harbor master pilot transfers, the HMPT. By the way, they probably should deploy it at the Suez Canal. It might help, just as a quick note to folks that might be responsible for that one. And utility sector, right? Those have all been quite, there's several investors that have been quite interested in this. And the fifth kind of catalyst is the fact that consolidation has started, right? So you're either, as an operator, if you're sitting there today, you could say, I'm going to be proactive and I'm going to go out and, with perhaps outside capital, if I don't have the resources in-house, go out and become an acquirer, or I can be reactive, sit back. The only question is you might be left in the dust as the consolidation game occurs around you. So maybe we'll take a quick look at how the investors are looking at it. Investors right now are looking for free cash flow companies of 7.5 million plus to create platforms. And by platform, I mean it's companies to which other companies will be bolted on. You can do roll-up acquisitions as an investor together with a great management team, where you can add 2.5, 3 million plus free cash flow companies to the bigger one. But you have to start out with a bigger base. That's also a base on which equity and debt can be raised. And so that's an important part. And the reason why I said free cash flow is we can't just look at EBITDA. In part of an acquisition that we just concluded at the end of January, we were looking at two particular companies from an operator perspective. And we were assisting the acquirer in buying one of the companies. They may still move forward with the second one as well. But one company was capitalizing maintenance CapEx, and the other one expensed it. And maintenance cash CapEx is a necessity to continue to keep earning the money that you need from an EBITDA perspective. So it looks quite funny. One company seems to have twice the EBITDA of the other one. When you actually eliminate the maintenance cash CapEx that you need to generate your business, oh, look at it. They were only 10, 15% apart. So the focus, and people are getting smart about it, is that expenses that you have to meet from a cash perspective is not something that will be considered as the base on which M&A multiples will be paid for businesses. Debt, on the debt front, for the OGP markets, it still faces more of an uphill battle, but capital is there. The question is, what is the leverage and loan to value? What is the cost of that capital? And how restrictive are the other terms? That's really the lens through which to see debt for the offshore markets. And that's simply because a lot of lenders, and yes, I was part of that group, both in lending and then at the end of the day, bringing 27 financial institutions together at Waypoint, a lot of them took a hit in the industry when the entire industry went down. And so that's still fresh in certain creditors' memory. Memories tend to fade reasonably quickly. So I think people are looking at stepping back in, but they're going to be stepping in more gingerly. For the non-OGP sectors, debt reasonably priced is available. And sometimes it's in local bank and other markets. Clark mentioned the two main EMS operators in North America. They're still able to raise asset-related financing for 4 to 5% for their EMS assets. So despite sort of the credit rating that they carry, what's important to understand for operators or other parties around the table today is that if you want to run a real competitive capital process and have a robust interest in the offering that you're looking at, you can't really do it below 30 to 40 million as a minimum size. You really, if you're below that, your local banks are typically your best bet. Overall, maybe talking a little bit about new investors that are coming to the table. We're seeing interest now from what's called the ESG fund side, the environmentally and socially responsible investment areas and asset managers. If you think about wind farm, EMS, firefighting, that is a thematic that works extremely well with the ESG market. Another group of investors that are coming in is infrastructure funds. They have interest in some of the same areas as the ESG funds, but also into telco, certain utility, search and rescue, and the Harbor Master pilot transfer kind of programs. That is an infrastructure play. And the benefit of some of these investors is that they are able to potentially bring the entire capital stack of both equity and debt that they can allocate in-house. That significantly reduces the potential dependency on needing to get new debt, and also from a management team and ultimately the owner perspective, owning both pieces in-house is just smoother sailing than having if you run into trouble, than having debt and equity stacked in different components. So I think maybe before we move to some questions, I'll just kind of conclude. Look, the consolidation train has started and it's left the first station. Question is, who will climb aboard at the next couple of stops before they're left behind? Second thought, again, I think the existing owners of operators and lessors, I think they've come to grips with the pain that caused 2015 through today. I think for the longest time, people were sort of like deer stuck in a headlight, and correct me out, but it's like the hierarchy of needs, or the Maslow's hierarchy, where you've got like stages of grief, and you first have to realize that, you actually had to grieve. I think today they've transitioned from hoping, for full recovery, that was wishful thinking, to the question of what's the best recovery and strategic steps from here on out. And so that ownership mindset, you can't create a transaction if your bid-ask spread is too far apart, right? No matter how interested of a buyer you have, if the seller has not realized that, we made a bad decision here, but not maybe because we made a bad decision, made it under these assumptions, the world changed. So now I'm reacting to it.
Okay, so they need to go through denial, anger, bargaining, depression, and acceptance.
Correct. And then, the last point is that capital is available for the right size of assets and companies with new investors coming in. So, and they are looking at consolidation and roll-up plays. They're not looking to invest just in one party and basically see the same circus of contract musical chairs going on. Those investors are there to build stronger companies that will be able to have a different cost structure, potentially, a different ability to appropriately price with the end customers, and therefore end up, while still providing service at a good, decent price to Tony and his colleagues, but it's there to effectively create stronger companies that are survivable at the end. So that's really the picture that we're seeing now.
Great. Two very quick questions, because we've still got Chris to come. Christine, Charles Rees is saying, what is the best lender for startups? You'd say go local.
If it's local. Look, if you're a small company and you've had local banking relationships, that's the people who know you. Because at the beginning, it's a relationship that's significantly built on trust and the personal owner side. I mean, it's not uncommon for small companies that owners have to give personal guarantees, right? It's basically when you've gone through the adolescent stage and the adulthood stage that terms can change. Therefore, the world opens up to you in terms of the capital sources, and also that de-risks the owner personally, right?
Okay, great. And then a very quick question from Mark Schechter. Views on Milestone's future, re GCAS AerCap, very quickly.
I don't think it belongs within AerCap. AerCap has not adventured, other than AeroTurbine, AerCap has not adventured into sort of the adjacent marketplaces. It has been a fixed wing lessor. I don't see it really fitting in there. My gut is that, I mean, we're having discussions with people who are actually interested in acquiring that business. And just because we work typically with people from 75 million, could be smaller, 50 million to, I'll call it 300 to 500 million, we wouldn't be identified as a seller for them. I think a large bank like probably Goldman, JP Morgan or the like would conduct that kind of a sales process. I do believe it would be a process, but there's certainly discussions simply because of our prolific work in the sector in terms of the buy side for that.
Oliver, thank you so much. That's Oliver Althoff, Managing Director, Head of North America, CRE Corporate Finance. And if you're looking for an advisor to buy any lessor, he's very much available. Thanks, Oliver.
All right, bye.
Now, delighted, last but by no means least, delighted to have Chris Seymour, Head of Market Analysis, Ascend by Cirium. Chris, we started with pre-owned. You're going to take us through new aircraft deliveries.
Yes, thanks, Al. 2020, civil turbine helicopters. We ended up with a total of 457 deliveries, which was down about 120 on 2019, which coincidentally was about the same reduction we saw in 2019 over 2018. So again, a rather difficult year for new deliveries. Just quickly looking at some of the sizes, the light singles, which is the largest sector, down 77 deliveries last year. And really all the main types, H125, R66 were down. The Bell 407 was the only one really to just stay almost flat. It was up 3. But really, that when you get sort of big reductions in your main size, it's not going to be a good year. Light twins, conversely, did reasonably well, up 6. So that sort of size stayed, again, relatively flat compared to 2019. Super mediums as well. I know it's only a small sector. It was up 1. We had 5 and 6 deliveries for the 2 types competing there. Heavies, again, virtually doing nothing. The intermediate twins, which is the H145 and the AW169, which is a new sized category. So we're starting to consider, again, that was down as well. Both those types had poorer years than 2019. In fact, we look at the manufacturers, Airbus, Leonardo and Bell, the 3 main ones, all had reductions of 30 to 40 deliveries last year. Again, we're talking sort of civil markets, so civil operators, parapublic, not counting military. If we have a quick look at the sort of roles these helicopters were in, corporate VIP, which is the largest sector, again, that was down 79 deliveries last year. Perhaps not surprising given what we've seen in the past year and the sort of, COVID-19 pandemic and everything happening in the business community. Offshore, which is often mentioned, only 24 new aircraft handed over. You think sort of 5-6 years back, you could add a 1 to the front of that, but really nothing happening there. And again, no surprise given what we've seen in the past few years. EMS was reasonably stable. Again, you'd expect that with, again, the pandemic and the need for EMS helicopters. And utility, again, up slightly, 16 more handed over last year. And very quickly, regionally, it was Europe taking the hit, almost 80 fewer handed over in 2020, and Asia Pacific down 40. Europe is still just the largest market, but only by 1% over North America. So 2020, a difficult year, and I think 21 is probably going to be not much better, maybe flat at best. We're just starting work on our new forecast. Looking further ahead, I mean, okay, stimulation by new types. You've got the AW09, H160, Bell 525 maybe, but otherwise not a lot else new coming in. So it's going to be, I think, a difficult few years for the new build OEMs.
Chris, it's amazing that you're not expecting it to, they delivered those last year's, we saw production being stopped. It was hard to get aircraft to people. You're not expecting deliveries to really rise at all for 2 years now.
You might see a slight uptick, but I think there's still some caution in the market as to exactly what demand is going to be. It's difficult in a way because the backlogs are often not revealed, so you don't know exactly what the OEMs have on their backlogs. So you have to have a look back in history in a way and try and make a guesstimate. So I think it's going to be a difficult few years for the OEMs. So.
And are there any markets where you're expecting significant growth yet?
I think EMS is one sort of bright spot. I'm not expecting anything really in the offshore. That's a replacement market. That's going to be waiting probably a few years for the newer programs like the H160 to start getting some traction. I know we saw one order announced this week. Hopefully corporate VIP will come back a bit when there's perhaps a bit more renewed confidence as the sort of business community gets going again. And utility always, is a fairly broad sector. And because helicopters are so flexible, they can operate in so many different roles. I think that's, again, should see some uptick there. I know wind farms was mentioned, but again, that's still a fairly small market. You're seeing ones and twosies here and there. That's probably a longer term prospect.
Do you think manufacturers have done a good job cutting production?
I think so, yeah. I mean, you don't want to have helicopters sitting around whitetails doing nothing. So, yeah, I think that you have to be pragmatic and take some difficult decisions. Yeah.
Brilliant. Chris, thanks so much for joining us. Thanks.
Cheers.
Great data there. Thanks so much for coming on.
Cheers.
And thank you to all of you for joining us. Thank you so much to Aero Asset, who very kindly sponsored this issue, or this town hall. Their report is available on their website or below to download. Thanks so much to all our fantastic speakers. We look forward to seeing you all next month. Please remember that all town halls are available from your usual podcast provider. And